Let's chat about this Moody's upgrade and get in a very important voice in. A stakeholder as part of the government, Rathin Roy, the member at Prime Minister's Economic Advisory Council. He joins us on the show right now. Mr. Roy, good afternoon. Good to have you. And I'm sure all of you at the PMEAC must be elated today. What's your view on the upgrade? How positive is it really for India and the overall macros?
Well, I think it's obviously, I think nobody would disagree that this is a very important upgrade. It's come after a long time. It's an extremely positive signal for us that we are on the right track and that we need to continue to be on the right track.
And you know, one can see that reaction really come by in both the money markets as well as the equity markets. And I'd like to highlight here, sir, that, you know, bond yields have already come down by nearly 10 to 11 basis points. They're sub 7% now. Do you sense that borrowing cost is going to come down for the overall system as well as corporate India as well after this upgrade coming in?
Well, borrowing costs for corporate India to some extent depend on the Reserve Bank's views on on what the interest rate should be, what the repo rate should be, and that is a matter for the Monetary Policy Committee to decide. So I would respect that and not align what is happening with the ratings upgrade to that. But what this will inevitably and very nicely do, in my view, is lower the cost of long-term investment in India. In important investments we need to transform the Indian economy, such as investments in infrastructure, investments in water supply, investments in urbanization. So yes, of course, at the margin it will become, government borrowing will become cheaper, and that's a good thing. But also I'm expected to see a rise in both the quantity and the affordability of long-term finance for investment in infrastructure.
That was exactly my point, you know, that cost of capital is going to come down for corporates, hopefully. So hence, do you see a relatively quicker corporate credit offtake, a pick-up in investment cycle in the near term as well as the long term?
That is a function of demand for credit. And if to the extent that demand for credit was obviously constrained by the price and the availability of credit, yes. But what will happen inevitably, I think slowly, not immediately, is an increased availability of finance for investment in medium to long-term infrastructure projects. So I'm expecting to see an increase in the availability of finance for these things, including for public sector projects such as railways, defense, etc. Because this sovereign upgrade actually means that we now belong in a different asset class as far as finance is concerned, playing by their own rules.
You know, Mr. Roy, although we've seen the upgrade come in and during the course of the day, we've chatted with many economists and they have still highlighted the risk of India breaching the fiscal deficit target because of possible lower revenue collections, the government getting into elections soon. Would you say that that's a valid concern?
It is always a valid concern, and I think it's a concern that the Finance Ministry shares, that we run the risk of not doing what we have committed to do on the fiscal deficit. I am very confident that the Finance Ministry is doing its utmost to make sure that we do not breach our commitment this year to maintain our fiscal deficit target. A lot of whether that will happen or not and how difficult that will become clear in a couple of weeks in December, when we know what the final revenue numbers are and where, you know, sort of already spending commitments that have been made, the extent to which they have progressed. However, I am confident that within bounds of reason, unless there's an extremely unpleasant shock, it is well within the capacity of government, if it tries hard enough, to maintain the fiscal deficit target. I think the will to maintain the fiscal deficit target is there, and therefore I'm fully confident that we will do what we have been doing for the last 4 years, which is achieve what we committed to in the previous budget.
Okay, that's great to hear that, and that's really a validation there. But the IMF, sir, that slashed the growth forecast to about 6.7%. World Bank, ADB also slashing their growth forecast down, along with several leading economists. What's your view on the growth pickup in the light of the transition impact of GST as well as the currency demonetization to an extent?
Well, I'm not sure that one can automatically correlate a quarter-by-quarter growth slowdown, as I've said on your channel in other places, to demonetization or any other such policy measure. That judgment can only be drawn when we have more credible GDP data. Remember, these are very, very advanced estimates. And when we are able to better assess the sectoral impact of these measures. In the long run, we, however, know, even in the sort of relatively medium term, that both these measures had a transitory impact on the economy in terms of these macro aggregates. And therefore, if the transitory impact has been temporarily negative, then it is something we have to live with and move on. So, the real question, I think, for India is that are we structurally in a position to attain sustainable growth approaching 8%, and what do we need to do to overcome structural barriers to attaining that growth? In that sense, I think these quarter by quarter, sort of optics and theatrics are a distraction. We need to be serious about the fact that we need to grow consistently at between 7.5% to 8% in real terms for the next 10-15 years, and we must realize that's a long haul process. It's a test match, it's not a 20-over match, and we need to get on with that test match.
Okay, and now that we are on with that test match, all geared up, do you think that 8% growth level is going to happen soon?
It will not happen soon. We will need to have important structural measures which I have written about extensively and which cannot be covered in an interview put in place. It is certainly the case that we have put many of those structural measures in place already. For example, I think the progress we have made on the insolvency code is an important piece of structural reform. That and the Moody's rating, in a sense, recognizes that over the past 5 or 6 years, India has been getting on with the difficult and unglamorous business of delivering structural reforms that do not deliver results in the quarter by quarter basis, but deliver results in the long term. That is what this once in 10, 12-year rating upgrade, I think, is signaling to the rest of the world. So I think those structural reforms are underway, but just like in a test match, we can't take our eye off the ball, and we can't take our eye off the need to bring in different bowlers, different batsmen. We have to keep on at this. Whether it is reforms in markets, factor markets, whether it's reforms in good markets, whether it's a direct tax code, we have much more to do and a lot of completing and finishing of good policies that have been started to execute effectively. And I think we have been doing that. I think we could do more. We always can. But as long as we persist on this path, I am utterly confident that the Indian economy's potential is to grow at 8%. The question is, can we stay on this arduous, unglamorous long-term road to fulfill this potential? The good news is, I am confident that hitherto we have collectively as a country been trying our utmost to do this within the bounds of political constraint. And I do not think we are in a situation anymore where we are going to let short-term events throw us off track. At least I sincerely hope not.
Okay, that's good to hear. Let's talk about one big issue, and that's been job creation. What is it that you at PMEAC are suggesting to the government, given the domestic slow growth and also the environment of global protectionism?
Well, the environment of global protectionism should not mean that in a situation where other countries' exports are going up, ours stagnate. We've had some good news in the last quarter, but as I already told you, I don't do quarter by quarter. I don't play T20, I play a test match. So we need to examine what the structural reasons that are holding our exports back are, and we certainly need to give a fillip to those exports. Having said that, we have to understand that the days when export could lead growth are over. It can be a complement to growth, a handmaiden to growth, but it cannot be the leading driver of growth. Therefore, we need growth in private investment, we need growth in domestic consumption. And obviously, growth in private investment and growth in domestic consumption is what will drive jobs. So ultimately, my own view is that if we are in India succeed in producing what the people of India consume, at the very minimum, not rich or poor, all the people of India, at the very minimum, therefore, making sure that we produce food, and that's not just cereals, all the way up to proteins, dal, eggs, etc., milk, where our milk output goes to our children and doesn't get diverted to making ice cream and cheese because there's no demand at affordable prices without subsidies. If we produce clothing that the common person wears in quantity instead of importing it from Bangladesh or Vietnam, if we are able to succeed in the Prime Minister's very ambitious venture and a very credible one of delivering low-cost quality housing, if we are able to fix our business models and deliver both in the public and private sectors good health and education. So if our growth comes from delivering food, clothing, low-cost housing, health, education, with exports as a top-up, I think we are on the right structural track. And I think this is the direction we need to work. We have seen that a number of initiatives have been taken, at least in the area of low-cost housing, and I hope there will be others going forward to make sure that our patterns of production and consumption are such that we deliver inclusive growth by producing the things that people in India want to consume. And you will notice that if we do produce those things, that is where the jobs are and that is where they'll be created. And I think we can do it if we set our mind to it. It's not about producing cars or autos anymore. It's about producing the things that everybody in India consumes. That will give you employment and that will give you sustainable growth.
Okay, just one final question before we let you go, and then I've got to take a commercial break. A lot of it really depends on the cost of capital, and I'm going to ask you to stick your neck out here. Would you sense that there is perhaps some headroom that the central bank now has for a rate cut, given the rising oil prices, relatively high inflation expectations going forward? Or would you think that their stance is going to be much status quo, because globally as well, we are in an increasing interest rate regime?
I cannot second guess what the Monetary Policy Committee and my very capable economists and other colleagues on it will do. My sense is that the rate cut, independently of the central bank, has made conditions for long-term investment in India, foreign and domestic, more conducive in key areas like infrastructure, urbanization, sanitation, etc. I would expect my colleagues in the Monetary Policy Committee to take cognizance of this and to recognize that 2 Monetary Policy Committees ago, the structural reforms that they have said are essential for sort of both profitability and economic activity and investment to pick up, that these structural reforms are being recognized as being happening. And then of course they will take their view on whether, taking that into account with other conditions which are more short term, a rate cut needs to be is merited or not. But that is their job and I wouldn't wish to second guess them. But undoubtedly, irrespective of what they do, this means more affordable and cheaper capital for long-term infrastructure investment, which is a great news for our long-term structural endeavor, our test match.
Absolutely, there's no doubt about that, and I'm sure you even win the T20s along the way. But Rathin Roy, great speaking with you. Thanks so much for taking the time out and speaking with us today on ET Now.